Today is Tuesday, February the 18th, and we're returning after a 3-day long weekend for President's Day. We'll start off with the FinViz, and the first thing we always look at is volume. And it's about the same volume that we saw towards the end of last week. Decliners led advancers by 60% to 40% roughly. The Dow started downwards, picked up at noon, as did the NASDAQ, as did the SP 500. So I don't know if there was news that came in or not, but overall the markets were barely, well, the NASDAQ was nothing, the S&P was nothing, but the Dow was down 165. The key thing, though, is that the advancers and decliners on the New York Stock Exchange, which contribute to the stock market breadth market oscillator, were decliners led advancers by about 400, which is going to take the breadth indicator just a little bit lower. But the declining volume was significantly larger than the advancing volume, for only 400 units difference. And the let's see, the dollars, the advancing, that's the NASDAQ. So the advancing volume. Well, let's look at the stock market breadth. Okay, so there it is. It's fallen below the neutral line. What we said last week was that we had this bearish event happening. I won't go over the other bearish simple formations that we talked about on Friday, but this is the most recent one, which shows that the bears are in control, not letting the bulls get too much money into the market before they suck it back out. So let's now look at the bottom simple formation, and you have these 3 points which indicate the tug of war between the bulls and the bears. So look for us to go further, and because we went down below the really oversold line last time, recovered and then came back down again, it's entirely possible that we do again. So basically, the outlook is negative. The S&P down 10 points, still forming a handle, if this is what you want to call a cup and handle. Looks more like the Little Dipper constellation. That's not a technical term. Caterpillar, let's look at the volume of Caterpillar. Caterpillar was down $1.41. So the coronavirus is affecting Apple and Apple production. So the coronavirus is going to affect any manufacturing and certainly any consumption of this type of equipment in China. So we had fairly large volume in Caterpillar. Look at that, way over the average volume. So a little bit more than the Dow. The Dow was below average volume, but Caterpillar was over. So a little bit more selling. Apple was the big loser today, but it could have been worse. It did get down to, let's look at the 5-minute chart. And it did get as low as, in the opening trade, opening 5 minutes, 314.59, made another low at 315.23. Let's put the Woody's pivots on here and see if there was any technical trading based on the Woody's pivots, and it doesn't appear that there was. So let's see if traders were looking at the cloud, and they were. And its high point was at the top of the 5-minute cloud, and there we had rejection. So Apple may take a little bit of time to recover and fill that gap in here, but rest assured, Apple is going to recover. Both the SMIs are at their high point, but look how long Apple has remained in the overbought territory. With the slow indicator and the fast indicator. Both of them just stayed in the oversold, and it continued in that period from the middle of December to the end of January. And then we had a mild drop in the SMI, which accounts for this little drop in here. And then we resumed back upwards. So this is quite possible that we'll just continue to be in the overbought area for some time. We're also coming into conflict with the cloud, and there's nothing I like better than seeing candles drift into the cloud and find support there. That's a really good indicator. The SPX We said it's taken a long time to touch the cloud. It hasn't touched the cloud now since this period back here of October 2019, where we had this flat cloud attracting price. We don't have a flat cloud now, but it's been several months, 5 months, where we have not found support with the cloud. The last time we had support on the 50 EMA was at the same time, was resistance actually. Support was back in September, and then resistance, and it broke through. We haven't touched the 200 since October the 3rd. Not to say that we're going to come down to the 50 or the 200, but they always do. But the 50 is in an uptrend, so if we were to come down and touch the 50, out here somewhere, that would be okay with me. Goldman Sachs down $4 today. Even though it got support on the cloud, I decided to get out and cut my losses. I was at 60% loss, which is more than I wanted to be. Look at the Chiku span. Chiku span, we can't see it behind the cloud, but the Chiku span came as low as here, but it finished, should have finished back here. It doesn't show that here, does it? Nonetheless, Goldman Sachs, I'm out of it. Shopify, nice little bounce back on pretty pathetic volume. So let's just keep an eye on that. I haven't added to my long vertical. I still have not even half a position. I have 3 contracts, and normally I would have 5 or 6 contracts on something like that. FSLY, for those people tracking it, support off the cloud, not moving in any great rate. Let's look at the volume, and now let's look at the stochastic indicators. They're indicating short-term going up, and that's certainly what we see here. Long-term slowly going down, so they're crossing here. Tesla, I'm still short Tesla, and but I've got another 60 days. Tesla trades so rapidly. If we do get a big pullback, I may just take a $300 loss instead of a $500 loss. It's just an erratic stock, and I just don't like trading it. But I'm in it now. Whirlpool down $4, so it really is just in this extended channel now since the end of October, and coming into a fine point on this wedge that we pointed out is really quite old. It started back in 2017, found its bottom in January 2019. So for a year, we've been forming that wedge. Our cyber stocks, Cisco still isn't showing us any reason to purchase it. Let's look at it today. Ooh, that's ugly. Let's look at it today. That's, my goodness. There we go. So Cisco was down 30 cents today. Not quite down to the bottom of the cloud, but close enough that there were buyers at the bottom of the cloud to move it up. Still no commitment on volume, so no move there. Splunk is the other one that we were looking at, and it continues to move up nicely on low volume. But Cisco is the play that I want to make because I like the price of the stock. I like the fact that the options trade in a narrow range. You can't say the same for Splunk. There's pretty wide trading ranges. So I'm just keeping an eye on it. But Cisco is the big Dow entity that I would like to get into for cybersecurity. The VIX, volatility index, popped up a little bit today. That would be the coronavirus fears. That issue of the coronavirus is not going away. So we're just going to have to keep our eye on it. And the shenanigans going on in the White House don't seem to be bothering the market. And strangely enough, Bernie Sanders having won 2 primaries is not bothering the market either. Now we have Nevada coming up, South Carolina, and then Super Tuesday. That's going to be the big test to see if Bernie Sanders freaks the market. He has no billionaires that are contributing to his campaign, and that's the way he wants it. But he's running against two of the richest people in the United States. Bloomberg is worth 63 billion, and Trump, who knows what he's worth. He says 10 billion, which probably means he's worth $1 billion. So look forward to tomorrow. I just don't think we're going to see much. If anything, I would look for a test of 33.37 before we go any higher.